When most people talk about investing, they think about stocks and real estate. These are two common investing paths that have produced a lot of millionaires. In this video, I'm going to share with you three concepts to understand three different paths that can help you become a millionaire in the stock market. These are going to be super simple. It's one of those things you probably know about these already, but it's just good to reinforce them because it will help you on your journey. Now, before we get into this video, if you enjoy this video, make sure you subscribe. As you can see, a lot of the people who watch videos on this channel are not subscribed. So definitely make sure you hit that subscribe button and notifications bell if you do happen to enjoy this video. It really does help with the channel. So when it comes to making that type of money in the stock market, having a seven-figure net worth because of the stock market, one of the things to note is that you will have to put in a lot of money to make that happen. So the first concept is to invest a lot of money. That's the first way. Like a lot of people, almost everybody who becomes a millionaire in the stock market, they've invested at least six figures multiple times over, unless you're one of these people who did a very well calculated YOLO on options that went your way big time, although that's very risky and borderline gambling, but there's just some parts of it that sort of make you feel like you made a smart play. But at the end of the day, the stock doesn't move in your direction. It doesn't work. So I don't recommend YOLOing. And you will have to put in a lot of money into the stock market to see the $1 million status. So that's the first thing. I bring this up first because a lot of people think of like, oh, what's like the quickest way to like make money in the stock market? And it's just make more money. The more money you make, the more you get to put into the system, and then you get to get those returns based on the money you put in. Someone who has $500,000 to invest is going to get there much faster in most cases than someone who only has $10,000. So build up your income. The second way that people become millionaires in the stock market is they increase their returns. So if you get the market average, 8%, that's just the percentage that floats around the internet. If you get the 8% average return, that's good. If you are able to turn that into 20% per year, you get there a lot faster. Getting those higher returns takes a little bit more work. It's more research. It's really digging into finding what the right stocks are versus just putting money into the index fund to get your typical market returns. Now, it's not like 8% per year. That's just an average. So it's not like some years it's going to go up 15%, other years it's going to go down 20%. 8% is just the average, and it helps to keep that in mind if you are a long-term investor. But it is very possible to beat the market, get more than an 8% return, and build up from there. Being an investor in mid-cap stocks definitely helps you out, especially if you are picking companies with solid growth and they either are profitable or they have hinted at profitability. And the way you see that hinted at profitability is decreasing losses combined with increasing revenue. So that's the second way. Look for those higher return opportunities, because if you are able to double your money, that's going to have a bigger impact than if you're only able to get a 30%, 40% return in the span of a few years. The third way to build up to a $1 million stock portfolio is time in the market. Now, that's not timing the market. That's not doing the YOLO with options. And I feel like everyone should try to do some options trading when it comes to buying calls and puts, selling covered calls, selling cash secured puts. I wouldn't do anything crazy like an uncovered call. That's extremely dangerous. But I feel like everyone should give options a light try with 1% of their portfolio or less. But in any event, time in the market is going to get you that compounded return. So if you have, let's say, 8% average return, again, it's just because people say 8% average return, like you may have a down 20% year in some cases just because of how different stuff around the world happens. But in any event, if you're in the market getting that 8% return for 10 years, that's going to have a bigger difference versus if you've only been in there for one. Like if you are 18 right now and you invest roughly $400 per month and you stop doing that at 24, you could retire by the time you're in your 60s or 70s because that money gets to compound over time. Again, even if you don't touch your portfolio again from your 20s and onward until you decide that you want to retire, because that's the power of compounding. And the sooner you get started, the sooner you put money in, the more time you have in the market, the more the portfolio is able to compound over time. So this was just the framework for making it happen, for having that $1 million portfolio. There's no shortcut. It's just understanding these three core concepts, and you don't have to get them all right. You could get just two right. Some people only get one right, but it's better to have at least two of these under your belt so you are able to someday have that $1 million portfolio. But regardless of which path you take, it's going to take considerable time. It's going to take at least a decade for most people, unless you're making a lot of money, which then you could put more of that into your portfolio. I'd love to hear your thoughts on this video. Make sure you drop a comment. I love replying to you guys. And if you want more, make sure you subscribe, smash the like button. It does help with the channel. And we'll see you guys next time.